Support and resistance, if not the most important and one of the most crucial technical analysis skills to master. It's a basic concept, but don't let that fool you in trading. The basics are powerful. Support and resistance are the foundations of market structure. Most other technical skills you'll learn in this journal, like from the candlesticks to the breakout patterns, are all centered around these key levels. When you open up any Forex chart, prefer your very first steps to be to identify the support and resistance zones. These represents the key prices where currency pair are most likely going to react, either with strong volatility or sideways consolidation. After placing a few zones, you'll like to see what I call a roadmap or price guide in a bearish market. For example, you would enter sells and you would take profit at other support zones, making it real smooth. So support and resistance work hand in hand. They're opposite, but they rely on each other to exist. The market constantly moves between these floors and ceilings, like support and resistance. Eventually, they build up enough momentum to shatter these levels, breaking out in new highs and new lows. Once you see about three or four of them, enough to spot out that roadmap, you will see the theory of Elliott waves come onto the chart. In this example, we just have the market moving in real time. And with these key levels marked out, I have a really good idea on where the market is going. Now, it's all probable, but it's a high probability that the market is going to continue its downward momentum to other levels in price. So, when we use the support and resistances, other data starts to click. Like, why am I getting a doji here? Is this an engulfing candle at a floor that will make me buy? These were the market conditions in Euro USD on the 1 minute chart on 5/13/25. So you have to have patience with it. You see how slow it moves? You just watch it. It is 1:16 p.m. Eastern Standard Time. Here is another example of that EMA that I have mentioned before, pretty much being used again. Now, the EMA, I can give you a little hint. It's like a dynamic support and resistance. In this case, price has rose up to the EMA, and the EMA is going to act like a level of resistance. So this is the exponential moving average. Basically, the average price. It goes up, it goes down, but what's the average? Most likely you'll see it touch the average price, and then, as in this case, it is a resistance. So I'm hoping that it continues this downward trend. And you'll learn a little bit more about EMAs in a future video. For now, we'll just continue watching the market. Use these key levels in price, also known as support and resistance. Here it goes again, tapping the EMA once again. Just it just always makes itself back to this. So how do you find these key levels? So when you're looking at a chart, you will find price levels that have multiple uses of either their support or resistance. In the example, here is resistance, support, support, resistance, resistance. And hopefully this little tiny resistance sends it downwards to the next level. Here's more resistance. So down here would most likely be our floor. And since this is real time, the most we could do is just wait.